Hi, it's Larry Gaines from Power Cycle Trading. This is the Aftermarket Outlook Report. It's a new service we just started this week, and this report is for Friday, October the 19th, 2012. And first off, I hope you guys had a great day trading. This report is to update and review, to give an update and review of the major markets, and it's put together to show the current market cycles and any trend change based on our Power Cycle Trading model. The information will help you to get into new cycle trends early and out before they end. And this particular report is for those traders or investors that are not able to be sitting at their desk all during the day. So it's put together to give you information at the close every day, 5 days a week. Now, if you've not received my free ebook, just go to powercycletrading.com and look for the top 15 trading strategies and put your name, email address in there, and you'll get it right away. Now, I always like to start out with what I call a top-down market technical analysis. So I'm going to start out with the long-term trend, and this will give you a big picture of where we are and within a cycle. So you can see that the market for the S&P 500 index, this is the SPX, and this is a weekly time frame. We've been in an upcycle since the June 8th, 2012. The cycle model went long, right here where this arrow is, right at the close, and it's been long, for about 4 months, and it just cycle rolled over to the downside last week, October the 12th, on the close. Now this week started out very strong. You see the bar go up and penetrate above the open from last week, and then close back down on the lows this week. So the cycle trend on a long-term basis is currently down. The next time frame we look at is the medium term, which is measured by the daily time frame. And again, SPX, S&P 500. So the cycle trend is currently down, so it turned to the downside today at the close on the 19th. We're sitting right on this trend line, and we also broke the came right down to the 50-day moving average, which I'll put that in just a moment. So we were neutral, then it went long, it flipped back around to short. So it's been a very kind of choppy market. You've had a big move up, and then we've had earnings come out that were very disappointing on a lot of different stocks, and it's taken the market back down to the downside. Here's another look at the daily time frame for the S&P 500. You can see it came down, real heavy down day today, came down and held the 50-day moving average. So we could get a bounce back on Monday, but this was a pretty vicious move down right into the 50-day moving average. So right now the cycle model is to the downside, and we'll go now to the intermediate time frame. Here's the intermediate term trend for the S&P 500. We had a cycle short here on the 17th at 1400 hours at 2 o'clock Central. Had a nice move up, then it bounced back, and then it came back down here, and this up move turned and went neutral for the system. Then you can see the price action broke back through this trend line, and that was on today, and right here the system went short, and right at the close today it went neutral. So it caught a fantastic move down from 1451.64 all the way to 1431 roughly. So $20 move, 20 points, not bad. So this is a good example why you need some kind of system to keep you disciplined and structured in what you do as far as your trading or investing. Here's the NASDAQ future. The long-term trend, as measured by the weekly time frame, is down. The cycle shifted to the downside back on October 5th. So this sets you up to know, okay, watch out, there's potential for a major down move. So if you've been long through here, this was your indication to get out. Here's the NASDAQ 100 futures continuation. This is the medium-term time frame as measured by the daily, and we've had quite a few ups and downs. Here's a cycle high, broke back down. That cycle high came on the 24th of September, right around 28.47. Went neutral right here on the 28th of September at 27.91, so nice move down there. Then it went short again right here on the 8th of October at 27.93. Went neutral on the 15th of October at roughly 27.22, and then got sucked into this long on that up move early in the week at 27.70, and then went short yesterday on the 18th at around 27.32, the closing price there. So this is totally systematic. So short, neutral, long, short. So it keeps you disciplined. But we at Power Cycle Trading will use a combination of time frames. So for example, we would use the daily here along with the intermediate term 60-minute time frame and 45-minute and shorter to get a precise entry for whatever we're going to do. But this system just shows you what is going on currently on a longer term medium type time frame. Now you can see by the two different markets, the S&P 500 and the NASDAQ, that the technology NASDAQ weighted markets are much weaker than the S&P 500. So had a lot of disappointing news as far as earnings this week with Google, Intel, Microsoft, to name a few, and then next week we've got Apple. So right here, the NASDAQ market on the 60-minute time frame, our system went short right on the open, right around 10 Central at the closing price there at 27.08. So it got a huge move down, 27.08, down to currently trading at 26.66. So major move. So when we're combining trades and looking at trade setups, we'll combine the intermediate time frame with the daily to give us a better precise entry level on whatever we're doing. Now here's Apple. Here's a long-term time frame for Apple, the weekly, and so goes Apple, so goes the rest of the market. That's a major saying because it makes up such a big percentage of the NASDAQ 100, roughly about 18%. So you can see that the cycle model turned down for Apple back on the 5th of October. So if you'd been using the trading model and you'd been long for this uptrend since the August the 10th, so you would have been long Apple at around 6.14, 6.15, and you would have gotten out based on the system model at 6.55. So a nice move up here, capture the big chunk of that move. Now that would tell you to get out. So you're out, you missed this big down move, took your profits, and you could have been short as well. Another negative for Apple is you broke this trend line. From a weekly standpoint, this is a longer term trend line, so that's been broken and closed below today. Here's Apple again on the medium term time frame as measured by the daily. We've had some really great signals here. You can see the short signal came back here on September 24th, had a major move down, went neutral here on the 3rd of October, and then flipped, went short again on the 5th of October, came down here, went neutral on the 15th of October, so caught a nice move down there, caught a nice move here, got sucked in with this up move earlier in the week, so it went long, and then yesterday on the 18th reversed at the close to go short, and is currently still short, had a huge move down today. So it got into the short yesterday roughly at the closing price bar, 634.40, and today it closed at 609.84. So quite a nice move here in basically 1.5 days, or 1 day. Here's the intermediate term 60-minute time frame for Apple. The cycle model took a short here on the 17th at 1 o'clock, and it's been holding short ever since. So it's had a huge move down, got in here at 646, still holding short. So what's next for the markets? Let's go through some let's look at what potentially lies ahead here. Now here's the NASDAQ 100 again. Today you came down, and if you notice, you broke through and closed below the 100-day moving average. So potentially what can happen is you usually get a retest of these moving averages. So we could come in Monday hard down, and then you could get a bounce back rally into the back into this 100-day moving average, or you might open up, retest up, and then come back down and test back through the 100-day moving average. So normally if you touch the moving average and it bounces, then the next time down it breaks, but this was so weak today it broke straight through it the first time down. Here's another view of the NASDAQ with the 100-day moving average, and this is a 200-day moving average here. So after it's sailed right through this 100-day, the next major support comes in here at 26.33, right in there. So that looks to be the place where it's heading. You've got some support here that comes in right around 26.45. See all these highs right here? So it should stop right around here, 26.40, 26.50, right there. That'll be the first level of support, and then the 200-day moving average. So right in here, and then the 200-day moving average there. Now with Apple, you've got support coming down here. First level support's around 590, 595 in this zone, and then down to 580, 583 in this area for the 200-day moving average. So we'll see what happens. Next week is also October 25th is earnings for Apple. October 23rd is the E-mini iPad comes out. So I'll look for to find the first support level. Then I'll be looking at my intermediate term trend for a swing trade to the upside. Have a great weekend and good luck trading next week.